Hello everyone and welcome to your weekly Forex Outlook. This is José Ricaurte Jaén, Associate Editor at Tradersdna. And today I want to take a moment to go over what to expect this week. We're going to go and review the economic calendar, what to expect, what will be of interest for you if you're short, if you're long, just to give you an idea. And I want to take a look with you guys. Apple is something interesting developing there from the technical perspective, just ideas that I like to share with every one of you. And of course, if you have questions, feel free to leave any comments or email us directly at Tradersdna. Okay, let's jump to the MetaTrader 4. This time I'm using FX Primus MT4, and I want to start this outlook with the EURUSD, Euro versus the US dollar. It's interesting because over the last 2 weeks we have been in the presence of the full rejection of the 113 and above. Starting, if we take a look here, this is 1, 2, 3 times. First the 113 after the Jackson Symposium, then you have a couple days before, and the day of the event, prices crashing all the way down to the 111.17 range, and then after poor US data, the week after, all the way back to 113.20. But again, if we have this line here, prices failed to break above this 113.24, and again they're down here. Now, why is this interesting? Because market participant professionals are telling market participants that they're not willing to exchange above 113.24 euros to US dollars. This is the exchange rate that they're willing in the short term, as it is, to accept that price range. Now, this is what we have to understand as what it defines the resistance and the support. What is behind? It's not just a section on your charts. It's more of a message from the big players, and we just need to digest that information and apply that in our trading. Now, of course, a lot of the participants are expecting it to continue dropping to 110.45, but I do have some doubts as far as what to expect. I'm going to jump to the weekly chart to show you something very interesting. I'm using here the 100 moving average, and I also have the 50 period moving average. Now, if you see here, there is evidence of resistance with this moving average, which is interesting. Now, if we want to continue in the direction of the trend, of course, this will be to consider actually shortening the market at this level, 112.40. Our initial stop, very tight stop loss, could be at 112.64. But if you want to give you some more room, you can actually go as high as probably 113.04, and you will be targeting the next support, and that will be 111.25. Now, of course, if we take a look at the monthly chart, there is evidence that we're still in a bullish trend. I mean, we have this, in this case, ascending triangle coming off from the lows that we have around, I think it was 105.22 back in yes, was December, the first week in December, all the way recovering from 105.26 to 116.30, the 30 range, almost 1,100 100 pips to the upside. So although there's a bearish sentiment when it comes to the euro versus the US dollar, it's very important to keep in mind that if, I'm going to go back to the monthly chart, if we don't break and open below, a candle outside this triangle, ascending triangle, that will be below 110, 111 to probably 110.65, then I suspect we will actually be in place to be in the presence of a reversal, and we cannot discount the fact that we may target the upside of this triangle, go back all the way to 116.49. So we have to pay attention to this, to the price action and the different catalysts this week. We have a economic calendar full of relevant news for the euro and also the British pound. We're gonna make a quick pause and jump into the economic calendar. Take a look at. I'm going to use my FX book. This is the one I use. A lot of people go with Forex Factory. Some other guys use fxstreet.com. Just going to use over, and this is the one I like. And Monday, I remember we're right now at we don't have here the time here, but just a few hours of the Asian trading session. So not too much happening at this time, but things are going to change on Monday. So we're going to start with FOMC member Brainerd speech. Very important to pay attention to the comments on can be inflation, but we're looking for clues to support what a lot of analysts think may not happen, which is a hike rate in September by the Federal Reserve, by the Fed. So if we continue, Tuesday, full of news from Germany. The one I want to pay attention, consumer price index, and as well some important news for the Great British Pound. Consumer price index, very high, very important information. Think about this, if the actual price is slightly above consensus or similar to consensus, expect another, can be a short rally on the British pound versus the US dollar. Then also we have the economic sentiment survey for the European Monetary Union, and later today we have medium importance news for the US dollar. On Wednesday, sometime more interesting information for the Great British Pound, but I will be looking at this one, the GDP, Gross Domestic Product, year over year, quarter over quarter, most important year over year for the New Zealand dollar. For those traders, investors that are still short, targeting 72 cents, very important. If consensus is as the actual reading is as expected, we will actually can be in the presence of a reversal for the New Zealand dollar. Then continue, we'll have that same day Australian dollar, very important piece of information, employment change, unemployment rate, critical for those also trading the Australian dollar versus US dollar. Thursday, we'll be paying attention to, although we do have consumer price index from the European Monetary Union, I think we have to focus on comments from Dr. Mark Carney from Bank of England. That will be the most important. And then we'll have later that day retail sales, very important for the US dollar index. And Friday, consumer price index. This will reveal some information as how healthy is the consumer market in the United States. If this is slightly similar to consensus or above, and the Reuters Michigan Consumer Sentiment Index equals the same consensus, we may expect the dollar to continue its bullish momentum. I want to jump now back to our charts. I'm going to take a look real quick to what is happening with the pound, Great British Pound USD. In this case, the pound has been sort of disconnected from the US dollar in this case, and what we have to think is what is happening right now between what we can say is the life after the EU, although we know Prime Minister Theresa May hasn't called for the Article 50, but still the United Kingdom has been, we have been in the presence of good data, good numbers, and those have been very encouraging for in the short term and medium term. Now, of course, When we look at the technical levels after the big drop hours when the Brexit vote was confirmed, is this a process of sideways price action, and then of course moving to the 23.6% Fibonacci level. Of course, if we look at this section, we're going to take a look this. So right here, this zone has been since June very important resistance, and that will be in this case the 134.70, and we have three times where the markets are pretty much giving us instruction. This is a very important exchange rate, exchange value for the pound as it is right now. Now, if Janet Yellen at the end of the day decides not to hike interest rates this month, of course we can think like it can go as low as 131.53, and in the event of no hike, we can expect a reversal around this zone back to target this Fibonacci level, and probable continue all the way to the 38.2%, which will be around 136.41, and it will be very bullish for the British pound. This is something that we have to consider both sides, how to position ourselves during the next 3 weeks. And last one, I want to go over this quick weekly outlook. I want to take a look at Apple. This is something I will discuss later on the daily videos that we are going to develop on with Tradersdna. But I want to take a look at the price action in Apple. I'm looking at the weekly chart. This is very important. We all know that the last product show wasn't exactly exciting, so that's one thing. But if we take a look at the price action, and this is not something very difficult to see, I'm gonna put this way here. Actually, it's very bearish since March 2015, and what we have here is the usual pattern of lower highs and lower lows. So what I'm expecting here is to probably start a short position where my stop loss will be between 110. It will depend on the risk tolerance, of course, but I will be looking to have a stop loss at least this level. That would be the 112.17, and I will be targeting in this case. It looks September, October can be a difficult month, 2 difficult months for the equity market, so I will be looking all the way to go back to be below the 23.6%, close to $90 per share. This is interesting because Apple is just going through a period of lack of creativity and innovation, and this, of course, in addition to an overpriced equity indexes, will be probably the right formula for a decline in the stock value of Apple. Besides, of course, the lack of innovation in the line of products as it is. So that's it for today. Just to start the week, the weekly Forex outlook, we discussed a little bit of what can be the Janet's Yellen dilemma: hike rates with decent, not so bad US data, or wait after the US elections. Very interesting moment in the US economy. Thank you again. If you have any questions, feel free to leave your comments, and we'll see you tomorrow with another video analysis. Thanks again.